Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, we're going to do an update to the Las Vegas real estate market.
Woohoo.
Before we do that, subscribe,
Hit the notification bell.
share, and like the video because we said so.
There you go.
Okay, this is what we're going to do. We're going to go through all the numbers, talk about what's going on, get some interesting information, interesting things going on. As you're probably aware, Vegas market is pretty hot right now. One of the hottest markets in the nation.
And it's not just Vegas that's on fire. I think it's that way everywhere.
There's some markets that have cooled a little bit, but we'll just jump into the numbers and we'll talk about this. Okay, we're going to start off with this needle here you see. This is the market action index. It's a strong sellers market. It's at 50. This is the highest we've seen in 2 years. Okay, now 50 is not average. Like a normal market's 30. I don't know why they made the index this way. Most indexes, like 0 is the worst and 100 is the best, but for some reason, this one 30 is the switch over between a seller's market and a buyer's market.
Okay.
To put this in perspective, last housing crash, we were well into the 10 and 20 range a year before anything happened in housing. So until we see this needle go below 30, and then 6 months to a year passes, you're not going to see much happen. Okay. So we'll jump over to the other side here. We'll start with median list price. It was $540 in January. It's $580 now, $40,000. It was actually a little bit more, only because in December this number was like $520. Okay, so but on this thing we can only go back like 3.5 months or something. Okay. Per square foot, 274. It was 261 in January. This is per square foot. You could see home prices have just gone up. We do get the random people who call us or comment about how they're watching the market, and they're watching the prices fall in Vegas. But yet everything we see, like I don't know what they're watching, probably Crash Bro videos, right? Have you seen anything? Because everything we see, okay, anecdotally, Juana, you put a listing in the MLS, you got 5 or 6 offers.
We got
ton of offers.
Yeah. But again, anecdotally, there are listings that are multi-million-dollar listings and they're getting multiple offers. So it's a matter of that convergence of price, value, what the seller will accept and what the buyer is willing to pay. Properties that are priced well get a lot of attention and get offers. Properties that are priced optimistically get to sit there and watch the market pass them by.
Yeah, I definitely think so. Okay, here's the next one. We're going to jump over to the first slide. We're going to talk about the inventory slide. Inventory slide here is very interesting. Now, the dot is the same day of the year in previous years.
Right.
Okay. Now, you probably say, well, it looks like inventory is higher than it's been in the past, only because 21 and 22 were the lowest ever inventories. If you look at where we were in October of 2022, that was about as close as we've been to a normal market. We've been substantially lower in inventory in Vegas than we've been in a decade. Like we should have, right now in Vegas, there's a little over 2,000 houses available for purchase. We should have 7,000 available for purchase.
Right.
This is a bit crazy.
It is. And of course, we have so many more people here than we did years ago. So we definitely have a shortage of housing. And it's not just here. There is a shortage of housing in lots of different markets. And certainly nationally, we see that. Just
so you get an idea, the housing crash in 2008, in 2006, we had 26,000 houses in the MLS available for purchase. We have 2,000 now. So until I see this number get above 10, I'm not worried. Phoenix had over 60,000 houses in the MLS. Now remember, they're only 3 times the size, so it was pretty crazy there too. Here's that market action index. This is a graph. If you look all the way over to the left, you see it was kind of chilled out at 40 and then it went crazy. 40 is kind of where it normally is. If we were to take this chart back to 2011 or 12, it would basically be at 40. It'd be stuck at 40. Our market was the most predictable. Home prices went 3, 4, 5% a year for a decade until the thing happened. And then you can see what happened here. We had the 3% or sub 3% mortgage rates. We had the other peak where interest rates started to go up, so a bunch of people panicked and jumped in and bought houses while interest rates are low. And then we kind of went back to a normal market, but it cooled off substantially. But here we are. Interest rates have been now 7% for certainly over 6% for a year and a half.
Right.
And look at how you can see where this thing is going. The market's heating up. Now, this isn't going to continue. It's probably going to chill out and go back to more normal in the fall, right?
Maybe. We'll
Maybe.
see.
What do you think the biggest driver is? Do you think it's going to be like inventory? Will more stuff have to come on the market? Because I've got some economic data that basically says like the economy's still on fire.
So yes, I mean, economically speaking, we do have people that have been job hopping. For the most part, they've been job hopping to jobs that pay better. So they have more money to spend on lots of things, including housing. So that's part of what's happening. We are dealing with the people who have the 3% thereabouts, give or take, interest rates, who are holding on to their homes and they're renting them out. So we've seen those people who maybe put their toe in the market and say, hey, maybe I'll sell the house. And then they go, oh, never mind. I don't need this money in order to buy my next house. So I'm going to go ahead and keep it and rent it out because it's let's face it, I've got free money on the house. So this makes a lot of sense. And then, of course, we have everybody that bought homes during the pandemic. And all these people, some of them bought their dream house, and congratulations. Some of them settled. And they settled for a number of reasons. One, because inventory was flying off the market. Two, because interest rates were starting to go up. So they were trying to lock in that interest rate. But for whatever reason, this is not the perfect home for them. And these people are sitting there waiting for that perfect home to come on the market and buy that perfect home. So you've got the people who are renting, who are looking to buy. You've got the people who have outgrown their home or their circumstances have changed and they're looking for a new home. And then you have the people who bought homes during the thing that shall not be named, and they're looking for homes too because they settled. So that there's a lot of pent up demand, is my point.
Here's the market action index, and it's broken by quarters of the market. Now the red line is the bottom quarter, the lowest price homes, and then the yellow is the second lowest price bottom, right? So basically the red line are like $300,000 to $400,000 homes. The yellow line are $500,000 to $600,000 homes. The green line is $600,000 to $800,000 homes, and then that blue line is $800,000 and above, million, 2 million. Okay, well, this is what's amazing, Juana. The bottom half of the market, so basically everything under 580, the market action index on those is over 60 right now.
Right.
It's absolutely a super hot market, and I mean, even luxury homes are just under 40, maybe 38 or something.
Look, homes are selling at all price points. That it really isn't the issue.
What's surprising you? You're a luxury broker. You basically are just dealing with multimillionaire. When you go to work every day and you're seeing these listings and all these offers come in on all these super high-end homes, like what's the thing? Because you've sold thousands of houses, but in the $300,000, $400,000, $500,000, $600,000 price range, all of a sudden you're seeing $7 million, $10 million listings. What is the thing that surprises you when you see this in our market right now?
I think that the thing that surprises me the most is that they're not necessarily what you would expect all the time. So they're not necessarily these 10,000 square foot homes or something like that. They tend to be nice homes, but they're not gargantuan. They're not necessarily, what you would envision depending on your market in that price point. Vegas has a luxury market that is really growing. There are a lot of homes that have gone up in value. So, for example, depending on the zip code that you're in, maybe the median home for luxury might be as much as $6 million. And you're thinking, what? But it depends on where you are, because you've got these communities that the entry point in the community is maybe 2 or 3 million. And they go up from there to tens of millions.
Right.
So, and if you were to tell somebody, even 10 years ago, that the Vegas market could support homes in the $20 to $30 million range, they would have thought that you were intoxicated, to put it politely. But here we are. We do support homes of those in that price range. So because of that, depending on the community, you know, the amount of luxury is really amazing and incredible. I don't think people realize how much luxury there is in Vegas, and that the true luxury, these homes that are, you know, $5 million and above, are pretty substantial. And you don't get into something extraordinary, I would say. You don't get into the extraordinary until maybe you hit 7.
Okay. Here's the price per square foot chart. As you can see, this thing, now that little bump kind of in the middle was the interest rates going up, where it wouldn't have done that normally. If interest rates had gone up over the course of 2 years, that thing would have smoothed out. So you wouldn't have seen that spike. You would have just seen it go up. A lot of people like glommed onto that number and said, oh, well, that's just a normal market. Like homes have always been worth $274 a square foot. And you can actually see that today, if you go back and look 2 years ago, we're actually higher today than we were 2 years ago today. The dot showing the same time 2 years ago. And we did have a little bit of a pullback because interest rates shot up. But a lot of that pullback was just because it was a fake number, because people had just said, look, I just need to get a house because my lender says if I can get under contract in the next 2 weeks, I can get under 5%. So just overbid by $30,000. I just need to get the house. I don't care. I don't want to pay 6-7%. I don't want to wait 6 months. I need to get the house now. So we were listing houses back then where just everything got multiple offers instantly, right? Mm-hmm. Okay, but here it is. If you look at this, you basically draw a line from the bottom left up, and the market just basically has been going up a little more than 3 to 4% a year. I think last year we're up 6.1% year over year, which is pretty impressive, which is about how much it fell from the 2022 to the previous year. It fell about 6%.
Right. And I think, when you're looking at the Vegas market, what you're seeing for the most part is either a number really, most of the time you're seeing that regardless of price point, you're seeing if 80 homes in this particular area came on the market, then probably pretty close to 80 homes were absorbed. So we're at this point where we're not really growing inventory very much, if at all, and in some price points and in some areas of town, inventory is actually decreasing.
With that in mind, we have that chart, market segments. Now, we've shown this chart before. If you go all the way to the left, the median price, these are the quarters of the market. Mm-hmm. So that's the top quarter of all homes. So if you took all the homes and lined them up and just drew a line at 25% and above, it's those. 695 is the middle of the second quarter. So the median's in here is about 580, okay, about 580,000. That's your average Vegas home right now. 499, call it 500,000, is the middle of the third quarter, and then 389 is the middle of the bottom quarter one. At 330, 15 years ago, 330,000 was 90% of all homes were less than 330, and 10% of homes were above 330. This is crazy. We were buying flips. We were buying homes at the trustee sale in Summerlin for 130 grand. Those homes today are all 700,000, probably. Some of them are. Okay. Go over here to where it says new and absorbed. Those numbers are about the same. So 55 new luxury homes, 57 were absorbed. And you can go down the list here. Other thing was interesting is days on market. Those multi-million-dollar homes, 63 days on the market, it's the median, 2 months, right? Then if you look at the rest of the market, it's pretty fast still. This is probably is this a better indicator, days on market? I mean, the average home sells in a month. What's a normal home? If we went back to normal times, how long do homes take to sell?
4 to 6 months.
Okay, so stuff's still selling pretty quick.
Yeah.
Okay, all right. Now, what is one of the reasons for this? So I found this article. This was a Fannie Mae. Fannie Mae does, of course, their housing general services entity. Basically, what they do is they sell the loans. They facilitate the loans, mortgage loans being sold in the secondary market, so that the lenders can keep making other loans and then sell those off to whoever wants to buy them, retirement funds, people like that, so they can have income from they bundle them all together and sell them. Okay, this is from Fannie Mae's report. Hot economy inflation likely to keep rates higher for longer. Rise in new homes listing projected to boost sales despite recent run-up in mortgage rates. So they're expecting more new homes to sell.
Mm-hmm.
This is what's interesting. We've had these people say, but Todd, if interest rates are high, people have to sell their house for less money because the payment on that person, it's too much. They can't afford it. But we're not saying that. Like literally the stuff you're saying is how the world works. We've been listening to Crash Bros now since 2019. They've been wrong every year. The opposite. They've been the opposite. Everything that they've said that would cause prices to go down is home prices to go up. The economy is hot and we have inflation. Both of those generally mean higher home prices.
Yep.
Right? And Vegas has sort of a double whammy. And this is why. We have the highest net migration of people coming here. We also have the highest job growth. We have more jobs created per capita in Vegas than any other city in the US. Mm-hmm. My theory is that it's not low-end people coming here looking for like low-end jobs. It's people with money. They're moving their businesses here. We've added these sports teams. We're getting ready to add Hollywood 2.0 is going to be here, right? We're probably, right. I would say in 10 years that the top 3 cities in the US for filming are LA, New York, and Vegas. And I think Chicago's up in there probably is one of the top ones.
Right.
And maybe even Georgia. We'll kick those guys out and I think we'll be third. I think people come here to film movies.
Well, Vegas is a really interesting place. We have a lot of different cultures here. We have a lot of different talent here. We have a favorable tax structure for businesses and for individuals. We have California next door to us, and so there's a lot of synergy going on with that. So Vegas has a lot going on for it, and it always has. And everything that's been happening has just made Vegas more attractive.
Yeah, I think so. Yeah, and the other thing I've noticed, this will sort of be my last thing, this is anecdotal. When I go look at the new homes and I see the new homes that are being built, the emphasis seems to be on they're not building $400,000 starter homes. Mm-hmm. They're building, like the base price is $1 million. So and they're not ridiculous homes. They're 3,000 square foot. They maybe have a little bit of a view. But then, that's the base price. If you want it to be decked out, it's 1.4. And then you don't have a huge lot. You have very short, like a small backyard.
Right.
They're not built on humongous lots.
Right. So, Vegas does have some higher end homes being built brand new, and that's absolutely true. We do have homes in the 4s, 5s, and so on. But this whole segment of homes that are $1 million or more that are basically track homes is okay. New for us. We've always had high-end homes, but they've tended to be custom homes, not track homes. And I think that's the surprising thing, is that we do have these $1 million track homes.
About a little over 20 years ago, I bought a Toll Brothers house. Mm-hmm. Now remember, they were a luxury builder. And this is in Summerlin. Mm-hmm. Base price, ready for this? $350,000 for a luxury. Told these are beautiful homes. I checked the other day. There's nothing in those neighborhoods under $1 million. Yeah. And it's like, it was like 300. It's like, God, that's a lot of money. But they're beautiful homes. Mm-hmm. And, we never really thought. I grew up in this town, and I remember. Even at the bottom of the market when we were flipping houses, I remember you could buy a house for 30, 40, 50,000. It wouldn't be spectacular. It would be an older house, 2 or 3 bedrooms, maybe 800 to 1,200 square feet, but it'd be a house. You could literally go buy a house. Matter of fact, you couldn't get a loan. Mm-hmm. Why could you not get a loan? Why couldn't you go to Wells Fargo or Banana Mortgage and say, I want to get a loan for $50,000 and buy this house? Because
it wasn't profitable for them to do loans at that price point. Loans started, depending on the lender, somewhere between $60,000 and $80,000.
Right. I actually had a lender once tell me, because somebody came in, they want to buy a house, and then the lender met with me and goes, yeah, we can't deal with them. And I go, why? He goes, oh, because it's too small. Like when he's too small, he goes, we like our start on loan is like 76,000. Like if it's a below 76, we don't even do it because we can't charge enough fees to make any money on it. So we don't even, and we can't bundle those. No one wants to buy a super small one because they get paid off too fast. So no one wants to take the risk. They want the higher dollar ones are the ones they want.
Right.
Right.
So interesting things.
Yeah.
If you're speaking of interesting, if you're interested in buying or selling in Las Vegas or in any other market, please reach out to us. We'd love to help you. If you liked the video, if it was interesting, if you admire Todd's wardrobe, please like the video, subscribe, hit the notification bell, share the video. Leave us your real estate related comments. We appreciate them.
If you were buying a house in a market and you would like to get the Redfin deal, there is a new startup called agentrefund.com. You would get up to 0.5% of the purchase price back as a rebate at closing. It's called agentrefund.com. You go to agentrefund.com, fill in the information, you get assigned an agent in that market, deal closes, and then you get up to 0.5% of the purchase price back as a check. After closing, it's pretty sweet, isn't it?
Pretty sweet.
Okay.
So, woohoo. That was fun. Please remember to leave us your comments, subscribe, hit the notification bell, share the video, like the video, and we'll see you on the next video. Bye.
Bye.